On Business Incorporated today. Central Bank of Nigeria Interbank Settlement Systems launch domestic card scheme. United States Secretary of the Treasury, Ms. Janet Yellen, is in South Africa. And swap panel criticizes Ghana's suspension of repayment of debts. Good afternoon. Welcome to Business Incorporated here on Channels Television. I'm Ini John Mekwa. We're over to the program with market numbers, which is our usual, and we see that Nigeria's market, the NGX, lost. It was a negative 0.02% as intraday South Africa was also in that territory. See there, down 0.62% at 73,491.13. We look at other parts on the continent, a positive close. Egypt had yesterday 2.13% at 16,791.11. Kenya also closed 0.29%, but in the red. We move from there to the Middle East and see where it's mostly negative at intraday. Abu Dhabi in the red, almost 0.5% there at 10,176.69. Dubai also in the red market today, 0.22% at 3,356.62. Looking at other region there, Saudi Arabia is in the green, 0.13%, as well as Qatar. We have those regions in the green, more than 0.5% for Qatar. We go to Europe now. German Chancellor Olaf Scholz says he is expecting his country to narrowly avoid a recession this year, despite earlier predictions to the contrary. His comments come after a closely watched survey from the IFO Research Institute, which shows that German business leaders are feeling increasingly optimistic, and this is in spite of continued concerns over the war in Ukraine and further interest rate hikes. Well, let's get the details of this. Joining us now is Kate Ferguson from Berlin. Hi, Kate. Good afternoon. What's giving this boost of confidence for businesses in Germany?
So the main reason for this growing optimism is the feeling that the energy crisis is being dealt with effectively and that the prospect of rationing is off the table for now. The winter in Germany has been relatively mild, thankfully, and so this worst case scenario has not come to pass, at least not yet. Now, the government has also been investing heavily in liquefied natural gas as an alternative to the gas it used to receive via pipeline from Russia. So there is a perception now that there are alternatives available. Apart from that, business leaders are happy to see inflation easing somewhat, and some of those supply bottlenecks that have really been hampering trade, they're clearing up as well. That said, though, this optimism might be better described as relief that things haven't turned out quite as bad as they could have. Overall, the economy is expected to remain sluggish, and the continued war in Ukraine will only perpetuate uncertainty.
Obviously, because it's not all rosy, Kate. We still have those other very sensitive issues still around the economy and its growth.
No, the German construction sector in particular is going through a rough patch at the moment. It's been especially hard hit by higher interest rates because it relies so much on borrowing. The cost of materials has risen at the same time and wages are on the up as well. And actually here in Germany, rent caps are an issue as well. Some investors are turning away from residential construction because they think that their profits will be lower because of these rent caps. There's also been quite a bit of mixed messaging. German Chancellor Olaf Scholz last week came out saying he was absolutely convinced that Germany would not enter a recession this year. He was basing that presumably on the improvement in business sentiment that we've been seeing over the past few months. Other predictions, though, haven't been the same. The IMF is forecasting half of the Eurozone to go into a recession this year. So you see how much of this is simply about sentiment. In Germany's case, a whole lot of relief about getting through the winter okay, rather than necessarily hard data.
So how are the markets responding to these two-sided conversations going on?
Well, not quite as well as you might expect, actually. Many investors seem to be taking these surveys with a pinch of salt, and they were taking their cues more from the United States. We saw those lackluster results from Microsoft, and that's fueled fears about the outlook for the tech sector in general. Energy and industrial firms also saw losses on European markets. So traders are really gearing up for some potential movement next week when Europe's earnings season kicks into gear. And of course, the prospect of further interest rate hikes from the European Central Bank is a perpetual source of concern as well. So a whole host of issues to get them through the next few days.
Yeah, well, a whole lot of issues there. Kate, thank you so much for giving us those updates. Talk to you tomorrow. Moving on to Asia now. Asia-Pacific shares were mostly higher on Thursday as investors digested a slew of economic data. Hong Kong's Hang Seng Index rose 2.17%. Hang Seng Tech Index jumped 3.96%. Let's look at the numbers there. The Nikkei 225 in the red, 0.12%. The Shanghai Composite in the green, almost 1%, 0.76% at 3,264.81. The Hang Seng Index, I already told you, is deeply in the green at 2.37%. Looking at those numbers, and Kospi is also positive this afternoon, 1.60%, while Australia is in the red, AX 200 in the red, 0.30%. We move over now to the United States, where S&P 500 futures advanced modestly on Thursday as investors passed through the latest batch of corporate earnings. Futures tied to the broad index traded up 0.32%, while Nasdaq 100 futures gained 0.5%. Futures tied to the Dow Jones adjusted. Looking at the numbers there, green features for the United States we see today at 0.08% for the Dow Jones, S&P there 0.26%, and the Nasdaq also up 0.60% at 11,944.25. Let's head to the oil market now. Prices rose by 1% on expectations that demand will strengthen as top oil importer China reopens its economy, and on news that United States crude inventories have risen less than expected. Brent crude futures rose 78 cents to $86.90 a barrel, and U.S. West Texas Intermediate crude futures also went up 75 cents at $80.90. China has been easing stringent COVID-19 restrictions this month, with Beijing reopening its borders for the first time in 3 years. For gold, prices hit a 9-month high on Thursday before trading slightly lower as investors hunkered down for U.S. economic data that could influence Federal Reserve's policy tightening path. Spot gold was down 0.5% at $1,937.16 per ounce after hitting its highest since April 2022. U.S. gold futures were down 0.3% at $1,937.60. Market attention turns to the fourth quarter U.S. GDP data, which is due in a couple of hours and could set the tone for the Fed's upcoming policy meeting. Most investors are expecting the Fed to raise rates by 25 basis points at the 31st of January. That's next week, Tuesday's policy meeting. The U.S. Central Bank slowed its tightening pace to 50 basis points last month after 4 consecutive 75 basis points hikes. Bullion is a non-yielding asset and stands to benefit amid lower rates as returns on other assets such as government bonds are reduced. Investors will also scan the U.S. weekly initial jobless claims data, which is due later on today, and U.S. personal consumption expenditure data, which is due tomorrow, Friday. And then we come back to Nigeria, where the Central Bank of Nigeria and the Nigeria Interbank Settlement Systems and the Bankers Committee have launched a national domestic card scheme in efforts to aid the country's payment ecosystem. It's the first in Africa. The new national card scheme, which is called Afrigo, will enable African and international interoperability by allowing banks and other institutions to offer a variety of solutions, including debit, credit, virtual, loyalty cards, among others. According to the CBN Governor, Mr. Godwin Emefiele, the new payment service solution, which is the first domestic card in Africa is also expected to promote cross-border payments, while international transactions on the card commences with immediate effect. He adds that the initiative will not stop the operation of existing debit cards currently used by banks, as is expected to support the growth of a robust and inclusive digital economy and foster innovation within the Nigerian domestic markets. Well, we move over to South Africa now, where the United States Secretary of the Treasury, Ms. Janet Yellen, is in South Africa on a working visit. Ms. Yellen addressed the media earlier today with South Africa's Minister of Finance ahead of bilateral talks. Areas of cooperation and mutual benefit between the two economies are on the agenda, which also includes talks on progress with South Africa's just energy transition. Ms. Yellen's Africa tour, which began in Senegal, is said to be a follow-up from the U.S.-Africa Leaders Summit in December, where President Joe Biden made commitments to support African economies. She also visits a Ford Motor Company assembly plant outside Pretoria.
As you know, South Africa is the first country with a just energy transition partnership, or JETP, to which the United States was proud to commit as a partner. This partnership represents South Africa's bold first step toward expanding electricity access and reliability and creating a low-carbon and climate-resilient economy, a move that I believe will alleviate the deep fiscal strain the energy sector is putting on South Africa's economy and support strong economic growth. The partnership will also invest in the jobs of growing industries so that the transition is just and does not leave anyone behind. I've appreciated the minister's cooperation and insightful views in our talks so far.
I'm equally pleased by the announcements that you made yesterday that the USA Secretary and South Africa's National Treasurer are committing to form a joint task force on combating financing of wildlife trafficking. I believe that Ms. Yellen and I will have fruitful discussion today on a number of issues, including anti-money laundering and countering financing of terrorism, climate financing, sovereign debt resolution in Africa, and other global issues which are going to be part of the G20 next month.
Welcome back. Still watching Business Incorporated here on Channels Television. Let's discuss fertilizer. Dangote Fertilizer plant was commissioned in 2022 with a production capacity of 3 million metric tons. Prior to this commissioning, total production of fertilizer in Nigeria was about 2.22 million metric tons. Now, the Dangote Fertilizer has increased the total output by over 100%, in fact, to be precise, 135%. Despite this increase, the retail price of fertilizer has continued to increase. It went from 7,000 to 25,000 Naira. And we know this, of course, affects food security. So let's delve into this and find out what's the missing link. Joining me for this is Abimbola Adigun, analyst with a financial derivatives company, joining us from Victoria Island. Hi, Abimbola. Good afternoon.
Good afternoon.
So what's wrong? What's going on? If we have an increase in supply of more than 100%, and yet we still have the price increasing, what's missing?
Okay, so normally we would expect that once there's an increase in supply, there should be a reduction in price. But it's the other way around. So now what's the reason for the increase in price? First would be the cost of production. Russia is the world largest exporter of fertilizers, and then we import raw materials from Russia. And since the Russia-Ukraine war, prices have hit the roof, they've been high. Secondly, fertilizers are used to make explosives. And then because of that, federal government has made it mandatory that if you want to be a supplier of fertilizer in Nigeria, you have to have a permit. Now, these people who want to buy, let me call them terrorists, that want to buy fertilizers for explosives, they will have to go to the black market to buy from these suppliers. And then this means that they're going to be buying at higher prices. The suppliers will want to boost the prices up. They'll sell at a premium, right? So this now causes a competitive demand between the farmers and the terrorists, in quotes. So this is why the prices have gone up. Then you can say for smugglers, they're smuggling fertilizers to across border at a higher price because no, not at a higher price, but like they're exporting it and they're selling it in dollars. So because of the exchange rates difference, they're getting, if they convert it to the parallel market rates, they'll get a high. It's more profitable for the smugglers. So basically, these are like the three major factors that are contributing to the increase in price of fertilizers as I know.
Yeah, a lot of negative factors there, especially the issue of smuggling and insecurity. So what that means that even if there's an increase in production, it can hardly get to the farmers who are supposed to be the original users of this fertilizer. Therefore, we have seen that our agricultural production has been affected by this. Can you hear me, Abimbola? Abimbola, can you hear me?
Can you repeat yourself?
Okay, I was saying that, I mean, the factors
yes, it's better.
Okay, the factors you have listed obviously are major diversions of getting this increased production of fertilizer to the farmers. So we shouldn't be so surprised that our agricultural production has not increased in spite of the increase in fertilizer.
Well, aside this increase, there's a yield is not so, we're not really getting enough yield because of one major reason would be the application of fertilizer, the use of fertilizers by these farmers. There are different fertilizers for different types of soil. Clay soil, the fertilizer you use for clay soil is different from fertilizer you use for loamy soil and other types of soils as well. Then the crop type, the quantity of fertilizer that you use for different crops, the quantity of fertilizer you use for crops are different. Like the quantity of fertilizer you use for maize would be different from the quantity of fertilizer you use for, let's say, apples and all that. So that matters. And the timing in which you use the fertilizer in the crop's life also matters. So this could affect the yield. So basically, the main problem is that there's a wrong. If I'm to summarize it, is that if the application is wrong, the expected yield will not be achieved, basically.
So, I mean, that just means that there's a need for more enlightenment and education among, especially rural farmers, on the use of fertilizer or the type of fertilizer for better yield.
Yes, exactly.
All right, thank you so much, Abimbola Adigun, for sharing your thoughts with us this afternoon. All right, we'll move to Ghana now, where the Republic of Ghana's plan to suspend debt repayment is a potential repudiation, according to a swaps panel. It's a significant step towards the possible restructuring being labeled a credit event, which would trigger a payout on credit default swaps linked to nations' bonds. The Credit Derivatives Determinations Committee ruled on Wednesday that a statement released by Ghana's Finance Ministry on the 19th of December to announce a suspension of debt servicing on its Eurobonds, commercial term loans, and most of its bilateral debt meets the definition of a potential moratorium. It doesn't yet constitute a so-called credit event because the nation hadn't missed payment on its bonds when the panel was asked to evaluate the situation. Ghana is in the process of negotiating a restructuring plan for its local and external debt alongside the moratorium on its Eurobond payments. The country is also seeking a deal for its local currency debt while it's negotiating an agreement with international creditors under the Group of 20 Common Framework. A restructuring is needed to unlock an International Monetary Fund bailout. And Kenya is set to be replaced as the third largest economy in Sub-Saharan Africa by Angola and Ethiopia, weakening the East African country's power to tap investors and ties with a population that has more cash to spend. Faster GDP growth in Angola and Ethiopia will see Kenya relegated to the number 5 in Sub-Saharan Africa's economic rankings. And that's according to projections by the International Monetary Fund that show that Nigeria, is still the largest economy on the continent. A return to growth linked to higher oil prices saw Angola overtake Kenya last year, according to IMF, after the nation, which is the continent's second largest oil producer after Nigeria, ended years of recession. Ethiopia is this year set to replace Kenya from position 4 on the back of easing armed conflicts in the nation and the continuation of the ambitious economic reform drive aimed at opening one of Africa's fastest growing but most closed economies. The IMF expects the economies of Ethiopia and Angola this year to expand by 13.5% and 8.6%, respectively, on dollar terms. However, Kenya is projected to record a slower growth of 2.4% in the review period as the country grapples with aftershocks of COVID-19 pandemic, droughts, election jitters, and disruptions of global supply chains by Russia-Ukraine war. Then looking at back in Nigeria, the Central Bank of Nigeria is still on that drive of sensitizing Nigerians on the redesigned Naira note, and it's remaining just about 5 days to the end when the current Naira note will no longer be legal tender. Latest move by the Central Bank was in Epe in Lagos State.
We accept the new currency by the CBN from the federal government. But what we are agitating for is that to make sure that the money is available to all banks so our people can get it through the banks. And then that you have made it available for the POS, we thank you for that. Most especially the ATM, and then considering some of the big business organizations. Our agitating is that the money has to be available in all banks. And you have to implore banks to pay this money, new note, to everybody.
1,500 and 200 Naira notes. And we have brought the message of the governor of the Central Bank of Nigeria to all nook and crannies, especially the riverine area, to the people of Ekpe, to say, please, bring out your old 1,500 and 200 Naira notes. As we speak, it is still a legal tender, yes. But come January 31, there will be no extension. And so we are pleading with our market women, our fishermen. That is why we have come to the riverine area ourselves, to preach the same message, to let them know that January 31 is just few days from now. They can take their existing 1,500 and 200 Naira notes to any bank around them, and of course, get the new notes.
So there we have it. The Central Bank of Nigeria's governor had said that there will be no extension, so it's just next week, Tuesday, and those old notes will no longer be legal tender, according to the Central Bank of Nigeria. We're asking that to share with us your new Naira experience on Business Morning at channelstv.com. We'd like to hear from you. But that's it on Business Incorporated today. Thank you so much for being a part of it. I'm Ini John Mekwa. Enjoy the rest of your day.